E-mini had two sideways days, two legs down, 1, 2. Small double bottom, and then a double top. You can call it a triangle, breakout mode. The market might front run the news on the government shutdown vote. So we might get a big trend day today, anticipating a good outcome over the weekend. I think more likely we will not. More likely we'll probably sideways again. 60-minute chart, I said double top, slightly higher high, major trend reversal, but too strongly up, low probability sell. I'd still favor the bulls. The bears have a small double top. The bulls have a small double bottom. Excuse me. Odds still favor a little bit higher. Yesterday, the market oscillated around the open of the week all day. I'm sorry about my cold. It makes it hard to talk. Anyway, the weekly chart had two exceptional bars over the past 2 weeks. Usually you do not get a third, and this week already has a big tail on the bottom. Even if it closes on its high, it will not be nearly as strong as the past 2 weeks. And therefore, this week is probably going to be some kind of a hesitation bar on the weekly chart. The bears want a bear body, which means they want the day to close below the green line, the open of the week. Big reversal, sold off strongly, and then a big gap up. But at the top of a 3-day trading range. It's now a 4-day. So location favors the bears. The reversal up and the bull trend favors the bulls. Because of the uncertainty of the vote today, the odds are today will be a trading range day. The vote will come after the close. However, there's always the possibility of some surprise news event during the trading day. Bears want the reversal down, top of a trading range, double top, lower high, major trend reversal, bull trend, bear breakout, lower high, major trend reversal, fairly tight bull channel, usually will not result in a major reversal. Usually the bears will need a double top, and they're trying to get that here. If this bar closes on its low, it would have maybe a 25% chance of being the high of the day. Okay, swing short, but higher probability. Wait to see if we start to get a series of bear bars. The bulls are hoping it's the low of the day, but buying at the top of a tight range, buying at the top of a trading range, low probability bet. So right now, even if it closes on its high, maybe 20% chance, 25% chance it'll be the low of the day. Double top, lower high, major trend reversal. So a double top and it's a lower high, and it's a major trend reversal after a strong minor reversal, but not a very good looking sell signal bar. 25% chance it's the high of the day. Can you buy on a stop above 1? I would not. Bulls are looking to buy a pullback. Look at the daily chart. Every bull bar has a tail below. Even when the tail is small, there's a tail below. 90% of the time, that's caused by a sell-off on the open and then a reversal up. If today's a bull trend day, this early sell-off will fail and it will reverse up. The bulls don't mind the sell-off as long as they're able to get the reversal up. Early sell-off, reversal up into a big bull trend day. Here, the sell-off is tiny, but still bull trend day here, sold off one bar, and this one bar created a small tail on the bottom of the daily chart. Early sell-off, reversal up. Early sell-off, reversal up. Most bull trend days begin with at least a small early sell-off. So why do we not have a big bear bar closing on its low? Well, because it's not all that bearish. And why did we not break strongly above the 62 high and the all-time high and get a bear bar? Well, because we're not all that bullish. The market's still neutral, and it's at the top of a 4-day trading range. The only trade here is short, swing short. It's not yet a high probability short, but that's the only trade I think traders can take right here. Taking a chance on the double top, lower high, major trend reversal. But more likely, we're going to go sideways. One tick bear body on the sell signal bar. There's a reason for that, and that is the bears are not all that strong. Can you buy above 2? Taking a chance it's going to be a huge bull trend day? I would not. We're at the top of a 4-day range, and we have a lot of uncertainty over the weekend. If it's going to be a huge bull trend day, what's the problem waiting to buy after it's clearly strongly bullish? There is no problem. So I would wait to see if we start to get 2 or 3 bull bars and then buy a close. Or wait until we pull back further down toward the moving average and then buy the reversal up from the moving average. If the bears get a second sell signal bar 3, and then it's a second entry sell with a double top, lower high, major trend reversal, and it would be a higher probability sell. If it's only a 1-tick bear body on 3, a lot of traders will not take that sell, just like they did not take the sell below 1. And I do not think a lot of bulls bought above 2. Top of a 4-day range. Limit order bears probably sold the 1 high, but they need a little bit more pullback before they make money. It's always useful to watch to see if limit order bulls and bears make money on the open. Because if you're in a bull trend, but the bears are making money, it's probably not all that bullish. It might simply be a bull leg in a trading range. Bears still trying to get a second entry short, but they need a pretty good sell signal bar on 3. Bulls want 3 to close on its high above the 1 high. That would make it clearly always in long. This is a problem that the bears have. Location. We sold off, we sold off, we sold off. They need to break strongly above the resistance to convince traders that this is the start of a bull trend day. I was watching to see if the bears who sold above 1 made money, and I do not think it pulled back enough. I think it pulled back 4 ticks, not 5 ticks. Bulls also have a gap to close 1 high, and because of that, a lot of bulls bought the market. Yesterday was an inside bar and a bull trend, and therefore a buy signal bar. But it's a bear bar, plus we had a big bear bar 2 days earlier. That means it's not a very strong buy setup, and there probably are sellers not far above yesterday's high. When you look at the daily chart here, you see the inside bar. Are you thinking, wow, I really want to buy above the high of that bar? Or are you thinking, I do not want to be buying above a bear bar at the top of a trend. I want to buy lower, especially after a big bear bar here. I think that's the problem the bulls are having here. They're breaking out above yesterday's high, but it's a bad buy signal bar on the daily chart. A lot of bulls are waiting to see if we break out strongly. So this has the potential to be a big bull breakout, although right now it does not look like it. But if it starts to go up, you'll have bulls buying the market, and we could quickly go up. 3 bull bars always in long, probably buyers below. It's a low probability sell. The bulls are not. They have 3 bull bars, but they're small. So the bulls have a problem. They're not creating a series of big bull bars. And the bears have a problem. They're not creating bear bars. They have a 1-tick bear bar here. So probably more of a sideways open. Location good for the bears, but momentum good for the bulls. Always in long, but not strongly bullish. Right now it does not look like it's going to be a big bull trend day. Can you buy that 4 low, 1 point lower, 2 points lower after 3 bull bars? Normally it would be a reasonable buy, but the location is bad for the bulls, the top of a 4-day range, and yesterday's a bad buy signal bar. So we knew there probably would be sellers not far above yesterday's high. The bears need more. They need more than a single bear bar. They might need 2 or 3 bear bars because the bulls have 3 moderately decent bull bars. Are we still always in long? I don't know. I am currently flat. And the location is great for the bears. Confusing open, big gap up, and then reversal down. 3 bull bars, reversal down. So this is probably going to be another trading range open like yesterday until we get closer to the moving average. Bulls bought the 2 low. They bought the 4 low. They bought the 2 low. And will they make money, right? Limit order bears made money selling above 1 despite 2 bull bars. And limit order bulls made money buying below 2. So limit order traders are making money buying at the bottom, selling at the top. Probable trading range open. Are the bulls going to buy above 6, double bottom, 1, 2? Probably not after that big bear bar. So probably still more of a limit order market. Bad sell signal bar 4. So a lot of traders are not willing to swing short, and a lot of bulls are not willing to swing long until we reverse up from around the moving average. We'll probably get there by going mostly sideways. Bears have a small double top. Bulls trying to get a small double bottom. A pullback from the breakout to new low of the day, but a weak breakout and a weak sell signal bar. Remember, yesterday's a bad buy signal bar on the daily chart, so you expect sellers above. And we triggered the buy here by going above yesterday's high, and we found sellers. Will we get all the way down to yesterday's low? We might. Yesterday was not a very big day. Can you short right here? We don't have much momentum down. We have consecutive bear bars, but tails on 5 and 6. Getting vacuumed down to the moving average, around a 50% pullback. Bulls giving up. And they're hoping for the opening reversal up from the moving average, but I think the daily chart is a big problem for them. Big enough bar, so always in short, but stop up here or up here. And we're in the middle of the trading range, so the location is not all that good for the bears. What about an opening reversal up from the open of the week and the 5-minute moving average? The bulls would need to do something very impressive on 8 to attract buyers. So Right now, it looks like we're going to go lower, even if we bounce first. Similar to 23 yesterday. The bulls tried to get the reversal, but the bears got a second leg down. Big bar, still climactic. A test of support, 50% pullback, and the open of the week. High 2 buy with bar 2. It does not matter that 3 went above 1. I'm just saying what the bulls see. But big enough surprise bar, 7. Most bulls are not going to be buying here. If we reverse up sharply, sure. But unless we erase a lot of this, it's probably the best the bulls get is a minor reversal, which means a rally in a trading range. Right now, probably 50% chance we've seen the high of the day, maybe 60% chance. Let's say 8 closes on its high. What about buying for a scalp up? And the issue is always the math, right? Are you going for 1 point, and are you risking, 2 or 3 points to make 1 point? And the math is not all that good. Buying above 8, you're buying for a swing, and I'm not going to buy above 8. If we reverse up strongly, then I'll buy it after I see the reversal. The odds are we're going to get at least a small second leg down. Sometimes when you see a sell-off down to support on the open, the market reverses up into a bull trend. And I believe that part of that selling is caused by bullish firms. They sell and trying to flush the bears out, trying to get the bears to get short, and then they buy heavily here, confident that they'll overwhelm the bears. So they make money on their short, and then they get a very sharp reversal up and a high probability low of the day. Remember, on the open, you very often see a strong move up or down, or multiple strong moves up or down. 50% chance any strong move on the open is going to reverse. So for the bulls, possible low of the day, comparable to bar 12 yesterday. But 7, strong enough, probably sellers above. So you buy above 8 for a swing. I think it's better to wait to see if we reverse up, get 2, 3, 4 bull bars, and then buy. 50% pullback. You also have limit order bulls who bought the 5 low and 6 low, and they bought more lower. The market has to get 1 tick above those lows for them to make money. If it gets there, then we'll probably get all the way up to the 7 high. Then we have big down, big up, big confusion. The bulls would want the reversal to continue up. But I still think the daily chart is bad for the bulls for today. Chances are we're not going to go a lot higher. 5-tick trap for the bulls, who went 5 ticks above 8, but strong enough reversal up. Probably the bulls will make at least a 1 point scalp. Low probability sell below 9. We're probably going up at least a little higher. A lot of the stop order bulls are giving up on the 5-tick trap, but I still think we'll go up a little bit higher. It's a big enough reversal to create enough confusion to prevent the market from resuming straight down without first going sideways. Big down, big up, big confusion, probably sideways. Mid order bulls bought the 9 low and 1 point lower, or just 1 point lower, and they've made their money. Trying to find something comparable to today. this is the kind of thing. Sometimes you get an incredible sell-off on the open, yet it reverses up for the remainder of the day. Same thing here. And when it does, it usually does not get far above the high. Whenever you have a big reversal, in other words, whenever there's a big sell-off and then a reversal, the market has a hard time getting much above the early high of the day. Here, it did not even get above the high. Is this a big enough sell-off to qualify as a big sell-off? Maybe not. So it's still possible that we can reverse up above the high and go up for a measured move up. This is, when I say a big reversal, I mean if the sell-off is about the size of an average day and then you get a reversal, usually you're not going to go far above the high. Here, the sell-off is not the size of an average day. It's maybe half the size of one of the recent average days. And therefore, the bulls still have a chance of a breakout above the high and a measured move up. Bears are out of shorts above 8, and some bulls are long above 8, hoping for a low of the day. Others will wait for a second entry buy, maybe above 11. Bears who are trading always in short, we are still always in short. Theoretically, they have to sell again below a bear bar. So if 11 closes near its low, theoretically the bears sell again. I would wait. To me, this is big up, big down, big up in the middle of a 4-day trading range. Bad location for stop entries. These reversals, probably a triangle on a smaller time frame chart. 1 minute chart, up and down, up and down, up and down. So breakout mode deciding bull trend day, bear trend day, most likely trading range day. Multiple reversals, dojis, really bad for stop entry traders. Suppose we get a bad buy signal bar on 11, yet go straight up. Well, I'd rather wait until I see it go straight up and then buy after I'm convinced the bulls are in control. And suppose you get a bear bar on 11. What about selling below? I would wait to see if we go down strongly and then sell. I think trading range is more likely. We're holding at the open of the week above the 60-minute moving average, around a 50% pullback. This looks like a bull flag. We have a bull trend, a deep pullback, a resumption, and then sideways triangle, 1, pullback 2, pullback 3. So it's still slightly more bullish than bearish. Testing the sell climax high. Often it stops there. The bulls are hoping this is a reversal up, opening reversal. So sell off and then reversal up. For something like this, I bought as it was going up and I scalped out. I'm back to flat, even though it's a reasonable candidate for the low of the day. On the daily chart, a lot of times if you have a buy signal and it triggers, which it did right here, going above yesterday's high, you get a reversal back down. And then it triggers the buy signal again by again going above yesterday's high. And that second buy is a higher probability buy. Am I going to buy up here? No, but if we start to break strongly to the upside, I will buy higher. The bears know that a second entry buy is a higher probability buy. So they're and trying to prevent the market from getting above yesterday's high again. They want a second failure at yesterday's high and for this to be a double top and the high of the day. We still do not have our answer. It's slightly more bullish than bearish. Will a lot of bears sell below 13? A second failed attempt to break above yesterday's high? Probably not. Therefore, probably buyers below 13, and the best the bears get is sideways. Good enough reversal so that we're always in long, but we don't know if it's going to be a trading range or a bull trend. I think the odds are against the bear trend right now. The bears should not have allowed such a strong reversal up. For the bears, a double top at yesterday's high, but strong enough reversal up, probably buyers below 13 and still always in long. You can sell and take a chance that it's the high of the day. I would wait to see if we start to get a series of bear bars and then sell. For the bears to take control, they probably have to get below the 10 low. So they probably need at least a few bear bars and to get below the 10 low or the 8 low. We went up, we went down, we went up. Right? Trading range, but the reversal, the 50% pullback of the gap up, and the bull trend all give a slightly higher probability for the bulls. A pullback from the 12 reversal. So a little cup and handle, we have a reversal and then a pullback. The odds slightly favor the bulls. The location right below the top of a 4-day range, I think, reduces the odds somewhat for the bulls. The range about half of an average day's range. So you got to be thinking about a possible measured move from the low of the day to the open of the day. Takes us up there. The problem buying at the top of the range, the risk is big. Even putting a stop below 14, the risk is big and the probability is not as high as you want. But I still think the odds slightly favor the bulls. Can you sell here, hoping that the resistance continues to hold and that we're forming a double top neckline, measured move down? I would not. Not a great looking stop order buy above 14. Okay, limit order buy below 13. Buying at the top of a range, low probability bet. It's easy to look at the bull bar, 14 or 2, and ignore the context, the bars to the left. But you have to be paying attention to the bars to the left. Everyone is naturally hopeful, and therefore bulls constantly are buying at the top of trading ranges, hoping for breakouts. Bears are constantly selling at the bottom, hoping for a bear breakout. It's better to look for a reversal when you're at the top or a reversal when you're at the bottom, and then wait to see a strong breakout before trading it like a breakout. You see how the bar closed without a bear body? That's good for the bulls. It makes traders less willing to sell below 15. Did you see how it was bull body, bear body alternating, and it closed neutral? So that's in a bull trend, neutral is bullish. I did not do anything here. I did not buy, did not sell. I was waiting for either a strong bull breakout or a better sell setup. So right now I'm flat, and I think we're still always in long. Sometimes you get these days where you get repeated abrupt reversals. Big up, and down. Like this. This is this kind of a day. This kind of a day. This kind of a day. I am still flat. I did not buy, I did not sell. I was willing to sell below 15 if we had a decent sell signal bar, but we were unable to get a bear body, so I did not do anything. second entry sell 1, 2, second entry buy 1, 2, second entry sell 1, 2. That's common in trading range days. The reason why traders need second entries is when the market is strongly down like this, the first reversal is unlikely to be successful. When the market is strongly up like this, the first reversal down is unlikely to be successful. When the market is strongly down like this again, even though we might be forming a triangle, lower high, higher low, a lot of the bulls will wait for a second entry buy. The bulls bought, they bought, they bought. So we're in the buy zone again. Don't know yet if they'll buy or if this will be a double top that breaks below the neckline and leads to a measured move down. Today still could be an outside down day. Daily chart yesterday, not very big. And reversed down twice from yesterday's high. For the bulls, a double bottom, higher low, and a triangle. And for the bears, a pullback and a bear reversal. A lot of bulls want a second entry buy. As is always the case in a trading range, momentum good for the bears, location good for the bulls. This is bar 18 right here, and bears want to break out below the 18 bar range. The bulls want a reversal up. 50-50 chance we're going to go outside down below yesterday's low, maybe 40% chance. Breaking below the 18 bar range increases the probability that we're going lower, even if we pull back first. In general, once you break below that 18 bar range, 90% chance you're not going back above the high. That means 90% chance either we stay in a trading range or we enter a bear trend. Bears is a double top, break below the neckline. For the bulls, it's a bull trend and two legs down, one pullback, two. But we're getting a lot of bear bars. A lot of bulls will want a second entry buy. That means the bulls will want it to go sideways for a few bars like this before buying. Not great to sell the close. Right, we're still in the middle of a 4-day trading range. A lot of bears would rather sell a rally. Micro double bottom 18-20, a lower low double bottom with 8, but not a good buy signal bar. Probably sellers above Globex chart. It's easier to see it as a high 2 buy, 2 legs down. The spider, same thing. Breakout, 2 legs down. A lot of bulls will want a second entry buy. So even if this rally comes somewhere up here, probably we'll get a pullback. So a minor reversal, even though it's a high 2 double bottom. Similar to this kind of a day, just abrupt big reversals. Another example, usually it's better to take second entry buys and sells. I had a limit order to sell 1 point above 20. I did not sell the 20 high. I placed a limit order to sell 1 point above. Did not get filled. We pulled back here. I do not want to sell on a second leg up, so I pulled my order. I still think minor reversal, and that there'll be sellers somewhere moving average 50% pullback, 14 low. For the bulls, it's a 5-tick trap, but I would not take that buy. And for the bears, they sold either the 20 high and 1 point higher, or simply 1 point higher. They needed to drop 1 tick below that 20 high to make money. If it does not, and if it starts to bounce again, they'll buy back their shorts. Trapped bears, right? They sold the 20 high 1 point higher. It had to fall below the 20 high, and instead we have a gap. increases the chances. So the bears are going to buy back their shorts. However, other bears will look to sell around a 50% pullback and around the 14 low. Back above the 14 low, so limit order bulls made money. Again, you buy up here betting that this is going to go up to a new high. I would not. If you're a computer in an institution, you can. But more likely, we're going to form another lower high. Can you sell at the market? You know, we got 4 bars without a bear body. It's probably better to wait for it to go sideways for a couple of bars before selling. Odds are bulls will buy the first tip. Not great to do anything here. Better to be buying pullbacks or selling after we got a second entry sell. Market's still deciding what to do. It's still a trading range day. I believe buyers either at the 25 low or about a point below. The limit order bulls about 1 point below made their scalp. Can the bulls be swinging? You know, I would not. I'm just looking for scalps. It looks like a trading range day. The bears are hoping it's a bear channel. The bulls are hoping it's a bull flag. Right now, it is both. And that's always the case when it's in a trading range. There's always a bull argument and a bear argument, and both are reasonable. Limit order bears sold the 20 high, and it looks like they probably will make money, just like the limit order bulls have bought the 14 low made money. Bears will probably buy back the shorts around the 20 high, so we'll probably get a small higher low here. What about stop order bulls buying above 29? Well, if they do, they need to stop below 20 because the odds are we're going to dip below the 20 high, so chances are we're going a little bit lower. Bears trying to get a gap here below 28 and a measure move down to a new low of the day. And some bears will be buying back shorts. The bears have sold the 20 high and scaled in higher. Bulls need another reversal up. Probably we'll get a higher low with all of these reversals today. So probably higher low and more confusion. You can see the bounce 1 tick below the 20 low where the bears bought back their shorts. They sold here and higher, or they simply sold higher, and they placed a limit order to get out at the 20 high. Higher low, but 7 bar bear micro channel. Not a very good stop entry buy. Bulls and bears bought the 20 high. The bulls made their 1 point scalp, and the bears took profits on their scalp. Still always in long. Probably will get back up to the 14 high because it was reasonable to buy up there, but this is not strongly bullish. Usually if you have a reasonable reason to buy and you buy more lower, the market will allow you to get out without a loss. These bulls bought 1 tick above that bar. They may have bought more here and had to get above that red line to exit without a loss, and you can see it did exactly that. It went just a little bit above the average entry price, and it sold off. And that tells you that a lot of the bulls that bought here bought more here, 1 tick above this, and decided this was so disappointing that they simply wanted to avoid a loss, and they placed a limit order to get out at their average price. The market had to go a little bit above that price for them to get filled. It did. and they were able to avoid a loss. Other bulls will hold, hoping to get back to this price, get out break even up here, and then with a profit on the buy from down here. The market might be deciding that it is going up to the 14 high, so getting a breakout here. The bears want a second leg trap in a trading range day, 1 pull by 2, so they want the breakout to fail. The bulls want 41 to be a bull bar, or at least a doji bar. They don't want a bear bar closing on its low. Not a great location for second leg trap and stop entry bears. You're in the middle of a trading range today. If you're selling, you'd rather be selling near the top. I still think we're going to get up to the 14 high. Is anyone going to buy below 40 or 41? Probably not. This is comparable to the second leg trap yesterday over here. What about selling here? Well, I'd like to see the bar get bigger, like yesterday, 23. Limit order bears who sold the 25 high need one more tick down. So these bears were not able to add on. It had to go up 5 ticks. And they were not able to make money yet. It had to get 1 tick lower. The bulls disappointed by 41. And the bears disappointed by a 4 tick trap. Can you sell below 41? I would not. It's the middle of a trading range, and I think we're still always in long, so it's slightly more bullish. Trading range days tend to spend a lot of time in the middle, so we may go sideways here. Bears getting follow through. I'm currently flat. The range is a little too tight for me to do anything. High 2 buy, always in long. We still have a bull trend, a high 2 bull flag. You can call it a wedge, 1, 2, 3. A bull breakout, and we're channeling up, but it's also a stop entry in the middle of a small trading range day. Not a very good stop entry buy. It looks like the open of the week is going to be the magnet. So we'll probably have to get down there again at some point. And I don't know if we'll close there, collapse below it, or rally strongly above. We're neutral. The market has not made up its mind yet. Up to the target, the 14 high, and the bulls would like the week to close at a new all-time high. Not much momentum, but a lot of times at the end of the day, at the end of the week, the market can have a surprisingly big swing up or down. No sign of it yet. Yesterday, a buy signal on the daily chart, a bad one, but it's still a buy signal. We broke above it here. We failed to get above it here. We're trying again here. That's another attempt at the buy signal on the daily chart. We might accelerate up. The bears want a double top, but we get 4 consecutive bull bars closing in on or near their highs. So the bears probably will need at least a micro double top. This could be a second leg trap with 1 and then sideways and 2. Fail breakout high of a trading range day. But I think most bears will not sell below 59. They'll wait for a micro double top like here or here. So probably buyers not far below 59. But trading range day, bulls do not want to buy below 59 if it closes near its low. Limit order bears selling the 4 high, the 15 high, the 41 high, probably will dip below 41 because it's still a trading range day, but might have to have a small second push up before it comes back down here. It's still possible this could be a big bull trend day, but I think it's not likely. 4 good looking bull bars closing on their highs, but they're relatively small, so not much momentum. Not a good stop order buy unless you're willing to scale in lower. Good location for the bears, but momentum favors the bulls. Probably sellers 60 high, 59 high. I say that because we're in a resistance zone, the top of a 4-day trading range. But it looks like a triangle, bull flag, so it looks like we're probably going higher, and momentum up favors the bulls as well. Double top, 59, wedge, 41, 59, but 9 bar, 10 bar bull, micro channel, low probability stop entry sell. I would not sell below 62. I would wait to see if it starts to go down. More likely, minor reversal, and the best the bears get is a triangle. So 1 pullback 2, so we have first push, second push, third push, so bull flag. A bad sell below 62, minor reversal. If the bears are lucky, it'll come down 6 ticks to the 60 low, but if it does, it'll probably start to form a triangle, bull flag. I would not short with the stop below 61. For the bulls, I would wait to see if we pull back to 60 and the moving average and maybe get a triangle and then look to buy for another leg up. Suppose we get 3 consecutive bear bars, do you short? I would not. If you're shorting, it's limit orders. It's a very tight pull channel. Traders will buy the 60 low and the moving average and the 41 high if we get there. For the bulls, double the bottom of 60, 63, but because of the wedge, different ways to draw it, 1 or 1, 2, 3, probably we're going to get a second leg sideways to down. So I would not buy above 63 unless you put a stop all the way down here. I would wait for a second entry buy. So first entry, pull back, second entry around the moving average and the 60 low. Probably sellers above and a second leg down after a wedge, 1 or 1, 2, 3 at resistance. I would not short it. I would look to buy down around the 60 low, the moving average, and the 41 high, somewhere down in here. With a channel that tight, I would not be selling with a stop. Might get down to the 41 high because you have sell the high bears who sold here, sold more below a bear bar like 63 or 66. They'll probably be able to avoid a loss. They might be able to make a profit. I think we're going at least a little bit lower, 60 low, moving average, maybe 41 high. And then the bulls will try to get a reversal back up, 50% pullback. Reasonable swing short, taking a chance that we get all the way down to the open of the week and that the week ends up as a perfect doji bar on the weekly chart. But with the channel as tight as this, more likely minor reversal, and we'll start to go sideways soon. When the channel is this tight, bears in general are only going to be scalping with limit orders, which means they'll be buying back their shorts. That'll prevent a big reversal down. And bulls don't want to buy when it looks like this at resistance, all-time high. They want to buy pullbacks. So bulls are waiting to buy down in this area as well. So probably buyers in this general area. I don't think we're going to go much higher. I don't think we're going to go much lower. The final hour of the week, big news coming up over the weekend regarding the government shutdown. So there's an increased chance of a very big move up or down at the end of the day, but still not likely. In the buy zone, moving average 60 low, might go a little bit lower, still always in long. Bulls trying to get a IOI at the moving average. But you have to be wondering about that 41 high. Before the open, or early on today, I talked about how yesterday was a buy signal bar on the daily chart. We went above it. We failed to get above it. We broke above it. We pulled back. I said it was a bare body on the daily chart and therefore a weak buy signal bar. And so far, today is behaving as if yesterday was a bad buy signal. The market is not accelerating up above yesterday's high. There's still time for a surprisingly big breakout. I doubt that we'll get it. Buying about 69. I'm not enthusiastic about it. Right? To me, this is a limit order market. Trying to sell above things, buy below things, and scalp. We have a quiet day. A lot of times, the market waits until 12:35 or so to try to get a swing up or down. We're in a swing up now, but does not have much energy. I have the open of the week drawn. Open of the day is also a possible magnet, as is yesterday's high. And the market's been focusing on yesterday's high all day. So we may end up closing right around where we are. This is basically a high 2 with 67, but you're buying at the top of a tight range. I don't think the probability is high enough for a scalp. You can always take it for a swing, but the bars are not very big. I would like to see a buy the close rally rather than stop entry buy. It still might go up to a measured move from the low of the day to the open of the day, but that's usually only important if the market has an opportunity to get back to the open later in the day. And we're running out of time, so I think that's not going to happen. So I think this measured move is less important. Best looking bull bar, 20 or more bars into the bull trend, more likely an exhaustive move than the start of a new swing up. So is it buy the close? I have a couple thoughts about that. But technically, it's buy the close. We got a series of 3, 4, 5 bull bars. At the end of the day, buy the close. Let me tell you my thoughts. First, it's starting too early. Typically, if you get buy the close that starts much before 12:30, it does not make it to the end of the day. So this is probably not going to make it to the end of the day. Second, while 72 is a breakout bar, it's also the biggest bull trend bar in more than 20 bars. That makes it more likely an exhaustion move than a measuring gap. So it's more likely that we're going to get back below these highs than it is that this is going to lead to a measured move up. Finally, if you do get buy the close at the end of the day, it usually only lasts 4, 5, or 6 bars and then ends. This is the fifth bar. Buy the close bulls, if they're buying, I think they should get out 1 tick below a bear bar, or 3 or 4 ticks, 5 ticks below a bull bar. Because if either of those happen, that's usually the end of the buy the close rally. I would get out of shorts, I would get out of longs. We're 5 ticks below 73. As for shorting, I think it's not a particularly good stop entry sell. Yes, it's a wedge. Yes, it's a buy the close rally that failed. But why were the bears unable to get a very good looking sell signal bar? Can you buy again? Sometimes when you get a buy the close finish and then you get a pullback like this, 4 or 5 ticks, the bull trend resumes. But usually, if it does not resume very far. So I think there's very little left to the upside. And since it was not all that extreme, you do not have a lot of trapped bulls who are desperate to get out. So there's not a lot of energy, on the breakout, not a lot of trapped bulls who are desperate to get out, so not a lot of energy on the reversal. Bulls are hoping that this wedge is like this wedge, but this one took 7 or 8 bars before it broke to the downside, and we don't have that many bars left. Whenever you see a market trade down and then trade up to a new high and then stall exactly at a measured move from the low to the open, that increases the chances that the market is paying a lot of attention to the open. And consequently, the market usually tries to get down to the open. This is not a very good looking sell setup, but you have to question why it stopped exactly at that measured move. It means a lot of institutions are paying attention to this. High one, a pullback from the breakout to a new all-time high. But this is enough of a buy the close finish, I think, to make a lot of traders hesitant to buy above 75. 75, a multiple of 3. So it's affecting the appearance of the 15-minute bar. A few minutes ago, the 15-minute bar was closing on its low, and this little reversal put a big tail on the bottom, and that made it less bearish, even though a wedge, 1, 2, 3. So sideways more likely than down. If this was not a reasonable by the close finish, I would say it's a reasonable high 1. But by the close is climactic. And even though this barely qualifies, it's bullish enough, I think, so that it is a climax and not a good buy above 75, probably a couple legs sideways to down, similar to this. Difficult to do anything, right? Bulls have a micro level bottom, a breakout pullback buy, but this is enough of a climax so that a lot of bulls will stop buying. And but the bears do not have a strong enough reversal down for them to be selling, and this is not so climactic that you have a lot of trapped bulls who are desperate to get out. And the result is nobody cares. The bulls don't think it's going down very much. The bears do. Well, neither one thinks it's going down very much, nor do they believe it's going up very much. So it's probably going to be difficult to do anything here. Another wedge, another way to draw the wedge, 1, 2, 3. But I would do nothing here. It's still always in long, not strongly bullish. Bears want a wedge, but you only have a couple bars left in the day to trade. So not much potential for the bears. And for the bulls, it's the same thing. If you buy, you get out 3 or 4 ticks below any bar, 1 tick below a bear bar. Pretty quiet day. Yesterday was a pullback, an inside bar, and a very strong bull trend. But because it had a bear body, it's a weaker buy signal bar, and therefore it's a lower probability buy setup. And you can see the market went above yesterday's high over here, triggering the buy. It pulled back, tried to get above again, failed. Succeeded to getting above here and pulled back, and now it's rallying, possibly for a measured move up. Now let me change this to a measured move based on the height of that opening range. That's the next obvious target, there or here. Almost all the way there. In strong trends, the market reaches every target, no matter how far the target is. A lot of times it'll get there at the end of the day, and that's what this is doing. Weekly chart, a fairly small body, but it's still another bull bar and a very, very strong bull trend. And monthly chart is extremely strong. This is the biggest bull bar late in a bull trend, so probably an exhaustive move, but there's no top yet. And when you have an exhaustive buy climax in a trend that's this strong, all the exhaustion means is the bulls will get tired, basically, and they'll take profits and wait a bar or 2 or 3 and then buy again. The chance of this becoming a bear trend without first going sideways for several bars is small, and that's why traders are willing to buy even though it's at the top of a parabolic buy climax. They know that if they buy, one of 2 things is likely to happen. It'll go up and they can make money, or it'll go down briefly and then back up. So there's no fear of a reversal, and therefore traders are willing to buy even though it's accelerating in a parabolic buy climax. They know that the buy climax is much more likely to reverse into a bull flag and then resume back up than it is to reverse into a bear trend. Now, this is what I was talking about. I've talked about this in the past. If in the final few bars you get a big reversal bar, it's usually an okay scalp because the bulls will give up and they'll take profits and not buy again for the remainder of the day. So if this bar closes on its low and has a 2 or 3 tick bear body, it's probably an okay short. But, the math is always hard. If you take the short, how much are you trying to make? 1 point, 2 points? And how much is your risk? 1, 2, 3, 3.5 points to make 1 point. Even if the probability is 70%, if you lose 3 points or 4 points 30% of the time, so let's say you take 10 trades and you lose 4 points 3 times out of 10. That means you lost a total of 3 times 4, 12 points. And let's say on 7 trades, you make your 1 point. So you make a total of 7 points. So here you are winning 70% of the time. And your total net is a loss. You lost 12 points on the losers and you made 7 points on the winners. Even if you tried to make 2 points on the winners, then 2 points times 14, that would be 2 points times 7, that would be 14 points on the winners, and minus 12 or 16 points on the losers. So it's still break even if you win 70% of the time. And therefore, this particular setup, I think, is a bad sell. We spent the whole day going sideways, triangle, and then we got a breakout here, and then a pullback, and then a couple more legs up. We yesterday, the open of the week was a major magnet, and we oscillated around it all day. And then today, early on, we sold off strongly. But 50% of all strong moves, no matter how strong they are, if they occur on the open, 50% of them will reverse. And therefore, if you see 1 bar, even 2 or 3 bars on the open, you got to be thinking that 50% chance it's going to reverse and not result in a trend. And this is a good example. For the bulls, they saw this gap up as bullish, a reversal from the sell-off, and they saw this sell-off as a sell vacuum test of support, the open of the week, which was the key price yesterday. And then we got that big reversal on bar 8. And while it was possible that it was the low of the day, I thought 7 was so exceptionally strong, the reversal up would probably be minor, which means that we probably would have to get below the 7 low before the bulls would have a chance of getting a bull trend. And that's what happened. We got a lower high and then a new low, and then the bulls got a bull bar 21, and the market rallied for the remainder of the day. It went sideways for a few hours first, but once the bulls had 56, 57 closing on their highs, 58 closing on their highs, the market was unlikely to reverse very far down. That means it was either probably going to go sideways or up. And here it went up for several more points. For stop entries today, selling below 1, double top, yesterday's high. It's a double top, lower high, major trend reversal. Bull trend, bear breakout below the bull trend. And then we have a double top with bar 1 and yesterday's high. A reasonable swing short, but only a 1 tick bear body. So not convincing, not a lot of rejection of the high price. So not a good short. Bar 2, a reversal bar, a bull reversal bar. So it's a pullback from this gap up, breaking above this bear channel. But it's right at resistance, the top of a 4-day range. And therefore, a lot of bulls will prefer to buy lower, like the moving average. And selling below 4, it's a second failed attempt to break above yesterday's high, but it's a bull body, not good. Selling below 6, we broke to a new low of the day, bar 5. And 6 is a low on short, but a doji bar and a 5 bar, 6 bar type trading range. and probably buyers around the moving average. We got a big collapse on 7, but you always got to be thinking, okay, a bar like that in the middle of the day, 60% chance, 70% chance you're going to get follow through. A bull like that, a bar like that, early in the day, 50% chance it's going to reverse. So you have to wait for the next bar. And then we got bar 8. Possible low of the day, stop entry buy, a high 2 with bar 2. Does not matter that 3 went above 1. But it looks like big up, big down, big confusion, and we probably have to go sideways. We got another reversal up here, second entry short, and then a small double bottom, 18, 20, bigger double bottom, 8 and 20. But a very tight bear channel, probably a minor reversal here, which means more sideways. Stop entries, I would not sell below 1, buy below 2, I would not sell below 4, not sell below 6. The first stop entry trades that I think were worth considering were buying above 8 or 11, but I think you have to get out below 13 or 14. Another failure at the top of the day and a failure at the top of the 4-day range. Aggressive bears could sell the second entry short 15, but why the good bull bar 14 and why the doji sell signal bar 15? Probably a trading range. Bulls could buy above 21, a big high 2 with 7, but tight bear channel, better to take a second entry buy, for example, above 31, but a 7-bar bear micro channel, so you probably need another buy setup like above 53, another bull bar. Selling below 41, a low 2 short, low 1, low 2, tight bull channel, minor reversal. Selling below 49, double top, lower high, but tight trading range, I would not do it. 53 is therefore the next stop entry trade, and 60, maybe a scalp, 64, maybe a scalp. If you take them, you need a stop down here. For the bears, second entry short, 62, and a wedge, 1, 2, 3, just the opposite of what we had down here. Wedge, 1, 2, 3, tight channel, here, 1, 2, 3, but odds are buyers below, just like the odds were there were sellers above here. Second entry short, 66, but small pullback bull trend. The biggest pullback is 1 bar, therefore probably sideways to up, and the next stop entry buy is 70, and then again above 73. Buy the close, sell the close. Really not good buy the close, sell the close until maybe bar 57, 56, 57, 58. That's when it switched from a trading range into a trend. Limit order trading, it was all limit order trading. Selling above everything, selling above 1, buying below 1, even buying below 5 and 6. Buying below 6 made sense, but you had to put a stop down here. With that huge bear breakout, I would not exit. I would wait for 1 more bar, and instead you get a bull bar. So the bulls who bought below 6, below 5, ended up making money. Probably buyers below 9, buyers below 13, maybe sellers above 14. I would not sell above a good-looking bull bar. Maybe buyers below 15, but this might be the top of a trading range, and therefore you could pull back deeply. I would put a stop at a minimum below 8, but I said I thought the market was going to fall below 8 because it was such a strong bear bar, and therefore not a great stop. If you did put your stop there and you get stopped out, you buy again above 20. Probably buyers below 23, buyers below 35, probably sellers above things above 25, probably sellers above 41. And these sellers had problems. If I see 2 or 3 bull bars, especially 3 bull bars like this, let's say I had a limit order to sell 41 and I saw 3 consecutive bull bars breaking out of a triangle like that, I would just get out at the market and take the loss. Probably buyers below 62, probably sellers above 64, but I think buyers around the 60 low in the moving average. So it might not be enough room for profit. Probably buyers below 73, but by the close, I would get out. The stop order bears are hoping to get money, but they got a bad sell signal bar, so I would not take that trade. Really fascinating time going on right now. The market has never been this overbought on the daily chart, on the weekly chart, on the monthly chart, never. The Dow started over 140 years ago. It's never been this overbought on any of those 3 time frames. The S&P started 95 years ago. It has never been this overbought on the daily, weekly, and monthly chart. But no sign of a top. And the trend is so strong on the weekly and monthly charts that when we do get a reversal, the first reversal down probably will be bought. I know you can point to something and say, well, Al, what about Bitcoin? Well, take a look at Bitcoin. Okay. This is where we are on the E-mini, right? First attempt to reverse down, second attempt to reverse down. It still went higher. So yes, it lost 50% of its value, more than 50% of its value. But the first reversal down here or here, the bulls bought it. So if the E-mini is going to look like this over the next year or two, I don't think it will. But if it is, it's probably not going to happen with the first reversal down. And everybody knows that. And that's why traders are willing to buy. Okay, can you talk about the day from an always in perspective? I thought we were always in on the open. Because we reversed yesterday's sell-off and the daily chart is bullish, but we're in a bad location. So I would not do anything here. And as far as swing trading goes, the first swing trade I would take would be buying above 8. I'd get out below 13. I would go flat. If I shorted here, I would go flat above 21. And for the bulls, I would buy above 21 because of the big high too. Get out maybe below 41 and buy above 53. I would get out below 62, buy again above 70, and get out 4 ticks below 73 or 1 tick below 74. Theoretically, you got to buy again above a good bull bar of 75, but I would not. Can you use the same price action charting techniques on option charts as you can on futures? Absolutely. Option charts are simply derivatives of futures, and they have to move hand in hand with futures. Yes, there's some math involved, so you get some logarithmic moves. For example, the delta, as an option gets more and more in the money, it becomes more and more, it behaves more and more like the underlying. But overall, the charts, you trade them exactly the same. It doesn't matter. Most people don't even look at option charts. They just look at the underlying because they know the option chart is going to be basically the same. You got to look at it as melted plastic. So the overall directions are the same, but the size of the legs up and down are a little bit different. However, they are just so totally linked, especially the closer you are to at the money and the closer you are to expiration. Eventually the option chart becomes exactly the same as the underlying. Okay, hope everybody has a good weekend. This could be a crazy, crazy weekend. If there's I don't think the Congress is going to do something horribly stupid. So I do not think we're going to get a 50-point gap down on Monday. But I do think we've never been this overbought in the history of the stock market. We're getting near the end of January. January typically is considered a barometer. I don't think that's important, but the bulls are trying to get January to close on its high. However, I doubt we're going to go much higher, and I doubt we're going to go up much in February. I think we're going to get a pretty good correction pretty soon. Weekly chart, when you get these 2 big bull bars like that, a lot of times the market will go sideways with 2 or 3 or 4 bars and then have one more buy climax. If that happens, that will probably be the top for at least a couple months. Okay, hope everybody has a good weekend.